Now, Pfizer's earnings seasons are ahead with $1 expected for the EPS and 16.67 billion revenue estimated. The earnings are out on Tuesday. Now, Pfizer is a biopharmaceutical company. It's got a global presence, relies on research as the basis for its operations. The company has multiple late-stage programs in its sustainable pipeline that can fuel its growth. It markets an array of vaccines, drugs, and its business really consists of six key units: oncology, inflammation, immunology, rare disease, hospital vaccines, and internal medicine. Now, with earnings ahead, let's just take a look at the seasonals that are coming up for Pfizer to potentially time any entries or exits. What can we see that's particularly noteworthy? Just look here over the last 25 years. What we see is that in the first half of May, we see a predisposition for the stock to gain in the first half of May, average return of just 1%. I think if we just move that a little bit earlier in the month, we can just see that slightly higher, and just over 1%, average 60% winning trade percentage. Now, looking at the stock generally, you can see that the summer months are weaker. You can see that quite easily in the bar chart below: June, August, September, tending to move to the downside. So once we're through that stronger summer season, you can see that on average, Pfizer lose 2.25% over the last 25 years between the 17th of May and 14th of October. And it's only got a winning trade percentage of 32%. So with earnings ahead, just bear this in mind. We are approaching a weaker summer seasonal time, and if you look at the max drop, you can see there's some pretty significant falls that can happen during the summer months: 20, 11%, 30%, 23%, 20%, 16%. So remember that if there are any deep falls, that the October to December time is much stronger seasonally for the stock. And then you can see here, going into the end of the year, 72% winning trade percentage, and then there's some really strong gains, and the drops are much more reduced. So there's a seasonal strength first half of May, last part of the year, and a weak summer seasonal pattern. Major trade risk. The major trade risk here, of course, is that earnings surprise significantly either way or the other, but this seasonal pattern should be borne in mind. Remember, don't just trade it, but season exit.